Oh, hello and welcome to another update video on SUI. Yeah, here on the SUI chart, we're still tracking a potential diagonal structure to the upside. That's unchanged from yesterday. The price has seen a rejection from our resistance area, which is not a surprise. That's why we have these pivots on the chart. They are areas to watch, areas of interest. For example, the support areas are the interest, are the areas where buyers ideally would get interested, and then the resistance areas are the areas that typically the bears would show some strength, but a break above resistance would be our first signal that indeed the bulls are generating a successful upside breakout. For now, I would leave the resistance area unchanged. This is our nearest Fibonacci resistance area, located between $2.95 and $3.06. For now, not broken. Okay, price is respecting this area, but we're also respecting the support area. So at the moment, there's not really anything particularly groundbreakingly new I could add to the previous analysis. The levels that are provided, they are all being respected for now, and the price could generate an upside breakout from here in a C wave of circle wave 3, for example. But the bottoming structure doesn't look entirely convincing yet or complete. I mean, I'm thinking about maybe this B wave unfolds as a triangle. Maybe it's going to be a classic ABC structure and this B wave is still unfolding. We have to be a little bit patient here. For now, what is just important is that the bulls defend this support region, between basically $2.67 and $2.88. The invalidation point for the triangle is down here. That's the red line. That is the 27th of June low, and the price is holding above it, of course. And if the price breaks below it, that would really formally invalidate the let's say the bullish diagonal structure we've been tracking here. So the $2.57 level is the key pivot, you could say, between bullish and bearish momentum, whereas already a break below $2.67 could be an indication that the bears are starting to take the lead, yeah? For now, we're holding above the red line, we're holding above Fibonacci support, and I think we just need to be ready for a few more adjustments of the nanostructures, which is not a surprise in a diagonal. What is more important is that the bulls hold the relevant levels that I mentioned, so we can keep focusing on higher prices. Yeah. What should happen in circle wave 3 to the upside is that the price gets to the $3.55 level, as mentioned yesterday. That is the 138% extension and normally the first ideal target for a third wave. When we get there, we can add support for wave 4, and wave 5 should get to at least the 161.8 extension, or maybe even the 1.786, so at $3.91. But for now, the immediate focus is on whether the bulls can hold and defend support. For now, it looks like that. But there's also nothing yet that would confirm at this point that support is holding. For example, there's no upside impulse. So this is the area to watch. Resistance is also clear. Upside targets are clear. In terms of alternative, you could say alternative bearish scenarios. I mean, this is getting super complex. I think what we have to be ready for is that maybe some kind of a more complex B wave is unfolding here, but I don't see a clear pathway for that at the moment. It's always possible that we get another low. It would be a reset of this wave 2, which presumably bottomed on the 22nd of June, but that would require a break below our invalidation point, and then the focus would shift towards the $2.09 level, which is the lower boundary of our larger support area. But for now, yellow is preferred, and I'm watching here for signals that the price is attempting an upside breakout. For now, there is no real upside momentum, so we're just consolidating in support. Yeah, that's the update on SUI. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.